Probably one of the hardest things you're going to do in crypto is DYOR, or doing your own research, all right? What does that even mean, and how do you even do it? So doing your own research is basically a catch-all phrase of don't listen to anyone's advice out there. If you're going to make an investment decision, you need to know what you're investing in, and you need to be comfortable with the risk you're taking and the product you're investing in and the business decisions you're making, because in crypto, you're your own bank, I'm my own bank, and you're your own private equity firm, and I'm my own private equity firm. Like, we're our own businesses, our own companies, we're investors, we're picking stocks before IPO, and we're doing all this cool, crazy stuff. So with that comes an inherent responsibility of research. This video is by no means going to be a catch-all, 100% foolproof way of doing your own research, but I'm going to sprinkle in some tips of what I think has been important in my DYOR journey. I joined crypto in about 2021, and I think, right now I feel much more comfortable in the way that I find and invest into products in crypto. And I think, in 2025 and in 2026, I'll be even more comfortable with how I do it. So this is a learning journey for everyone. Doing your own research is not a finite thing. You'll infinitely get better at it, especially as I show you the first tip on how to do your own research. So the first tip of doing your own research is what I call, well, I didn't coin it, but it's expert judgment. In the business world, in like project management, in software development, in all these places, they have a thing called expert judgment, which basically means like, you've done this job for 20 years, you're our CIO, what do you think we should do, right? Companies, whether they're a venture capital firm, a private equity firm, a software development company, an AC manufacturer, they have data, they have historical like numbers to look at, they have, like they can look at competitors and the market and what's going on. But at some point in time, whether they're launching a new product or doing a project in their company, or making an investment, they have to look to the leaders of the company, look to the analysts, look to the CIO, the CEO, the C-suite, and say, what do you think about this? When they say, what do you think about this, there's no inherent thing that they're looking at. There's no data. Like, these people might look at data, but when they ask a physical person, what do you think about this? They're providing opinion based on experience, and that's called expert judgment. So when you're investing into crypto, I kind of call it like the gut feeling, right? But your gut feeling is your expert judgment. And whether you're 1 month into investing in crypto, a year into investing in crypto, or 10 years in, you're gonna have different levels of expert judgment, and you just need to realize where you're at. So if you're very new to crypto, your expert judgment might not be as fine-tuned as somebody who's been in crypto since 2010, right? And that's okay, it's okay. But if you are newer on the scale, like I'd say I'm about 2 to 3 years into crypto, you always should probably try and find someone or something to help you have a little bit better expert judgment when you're making investments. It's always a wise rule of thumb to never listen to people like me, or people on Reddit, or people on Twitter, or people on YouTube, or your favorite influencer about investments, because at the end of the day, if the investment goes sideways, I'm not going to be able to help you, right? If I'm invested into something because I believe in it and you invest in it also, and the investment goes south, there's nothing I'm going to be able to do. So as somebody with a lower level of expert judgment, which I'm right there with you, we need to look to other people, but also internalize that we can't take what they say to heart, and we still have to understand what we're investing in, okay? So the first tip on doing your own research that I would say is understanding the fundamental value of expert judgment, and realizing that if you learn more in crypto, if you spend more time in, you keep researching, you keep looking here and there, you survive a bear market, you survive a bull market, your expert judgment is going to go up, and it's going to compound. All of these little actions will inherently make you a better investor over time, okay? So that's the first one. The second thing is always look at your bases, your fundamentals. So in the stock market, you have like income sheets and balance sheets, profit and loss. Crypto, we don't really have that. Some tools you can look at for crypto are like, you can look at some of the blockchain explorers. So on Cardano, it's like CE Explorer, or you can look at like popular wallets from big exchanges. Like, it's kind of easier to tell like what wallet is like a Coinbase wallet or a Binance wallet or something like that. Like, people who watch whale wallets, a lot of those whale wallets are probably exchanges or DEXs or something like that. So You can look at those CEX tools or Coin Explorer tools. Another thing you need to do is look at your fundamentals of your project. Something that you're investing in, you never want to just jump in. Like, what does the white paper say? What is the token? Like, what is the purpose of the token? Why should you trade dollars that you worked your time for this token? Like, does the token have any use case? Is it like Bitcoin where it has a use case on the blockchain? Or is it like a token that doesn't really do anything, right? That you are willingly trading US dollars that you use your time to earn for, right? You need to look at things like, what is the company's marketing? Who are the company's leaders and why are they leading this company? What is the community of this project? Like, what are the fundamentals behind it? Does this project care about decentralization? Does it care about scaling? Does it care about, marketing or building a community or Discord? Like, what is this project putting behind itself and why does it make it a good investment? Is the technology new technology? Is it new technology that's actually feasible to be built? Is it new technology that's like kind of way out there? I would consider the way out there stuff like metaverse and AI, like cryptos with metaverse and AI. How close are those really to being a reality, versus something like a DEX that's actually usable today, or like a lending protocol that's actually usable today, or like an L1 that's actually usable today, right? So there's different levels of technology you can invest in depending on your time frame and your risk tolerance. You need to look at things like token supply, market cap, fully diluted market cap. Is there burning in the token? Will new tokens be created? Is it hard capped? Does it make it scarce? There's a ton of bases that you should look at in crypto when investing in these projects. And then you can look at things like, what do other people think about it? Is there anyone smarter than you looking at it? Is there anyone that's like had a lot of experience? Are there any Twitter threads you can find about the project? There's a lot of research you can do on a new project if you really want to find out about it. So the second big thing when looking to invest in a project is you need to culminate all this information that you can find online about the project and just be patient with it and let that information sit with you. So I was in Cardano in 2021, I was in Cardano, and I'm still in Cardano. But as I was in Cardano in 2021 and 2022 and 2023, in 2023, I always heard about Ergo, but for some reason it clicked with me in 2023 that I should probably look into this thing called Ergo. And I spent a couple months sitting on the sidelines kind of asking people on Twitter, like, what do you think about Ergo? Or what does Ergo do that's better than Cardano? Or how does Ergo differ from Cardano? And, you can go read like a white paper. You can go read a white paper and you can look at tokenomics and, you can kind of see what people are saying on Twitter. And I did all that for Ergo, but I still wasn't ready to invest in it. Like, I never felt like, okay, now's the time for me to jump in. And that's part of my DYO, my do your own research timeline. It's like, you can learn all you want about a project, but if it still doesn't feel right with you, then just don't do it, right? And so eventually that feeling did kick in where I was like, okay, I really like Ergo and I like what it's standing for and I like what people are telling me and how the community interacts with me online. And I like the fundamental values behind it with kind of like following right along with Bitcoin. And I think it's a great addition to my Cardano portfolio. And so that's when I started adding Ergo in 2023, even though I had heard about it in like 2022. I never really took the time to look at it. So that's another thing is when you hear about something new, you can give it a couple months. You never have to jump in. There's never going to be your too late moment unless you're getting in on things that are hype driven. Okay. So just kind of understand the thing that you're investing in. And from there, you can kind of decide what is a good investment. Another thing I've been hearing about recently, because some people in the Ergo community are in it, is Alphelium. So this is another UTXO project, but it calls itself stateless or stateful. It's a stateful EUTXO or stateless EUTXO, where basically the blockchain is EUTXO, the consensus mechanism is proof of work, it's EUTXO, but it also has sharding, so it's like Ethereum account-based model. And so I've been hearing about this for a couple months, and like I've heard about it, I've read the documentation on their website, I've read through a bunch of Twitter threads. I post on Twitter and I'm like, what is alphelium? Why should I even look at it? Why is it better than ergo? And why is it a better investment? And people will give me threads and threads and threads that I've been reading. And it sounds really cool and looks really cool. And it has a bridge in testnet or something right now. And, but I'm still not ready to pull the trigger. The one reason why I'm not ready to pull the trigger is that I've never seen this stateful or stateless EU Texo model. So the next thing I need to do if I want to invest in it is probably open a little Alphelium wallet, check out the blockchain and see just what's going on it and what it's like, what the usability is like and stuff like that. So I'm in the process of looking at this one, but it's a slow process. So don't be discouraged if your DYOR is a little slower than you would care to imagine. Venture capitalist funds don't hear something in 1 month and then within the next month just go all in on it. They take time to do research on things. So it's okay if your timeline's a little longer than you thought. The third tip that I'd say about doing your own research in crypto is find out what you do not like. If you know what you do not like, that makes this thing so much easier, all right? It's like in my traditional life, in my fiat life, I invest in the stock market, in the S&P 500, and I like the idea of real estate, but the reason I do not invest in real estate is I do not want maintenance fees. I don't want someone calling me. I don't want to worry about tenants, right? In a world where I can make money on YouTube and I can be in blockchain and hold crypto on a USB drive, why would I want to have to worry about a call because my AC just went out on my rental property or like there's a flood in my building because a dryer or a washer machine just blew up, right? It's like, I love the idea that real estate is, and I think, maybe in my future it could be a viable option, but I just don't like it for myself right now as somebody who's in my position. So when you're investing in crypto, the thing to look at is really what you do not like. If you don't like meme coins, just don't invest in them. If you don't like EUTXO or UTXO, don't invest in it. If you don't like proof of work consensus or proof of work consensus mechanisms, don't invest in it, right? If you don't like the certain ledger-based models, don't invest in them. If you don't like NFTs, don't buy an NFT no matter how hyped up they are, right? So figure out what you don't like, and that'll make this game so much easier. There's 20,000 plus cryptos you can go invest in. There's 20,000 plus stocks I'm sure you can go invest in. There's 20,000 small businesses you can go buy in America, right? There's 20,000 franchises out there you can go buy. Figure out what you don't like, why you don't like it, and that makes this game so much easier. Figuring out what you don't like also might take some time, so that's okay. Just let it take time, and over time, stick with it. Stick with investing, whether you're in crypto, real estate, stocks. Stick with investing. Stick with the idea that you need something to grow your money, and over time, you can figure out what you don't like. That kind of goes in line with the expert judgment. Like, in the beginning, I thought all DeFi projects were awesome, but now, I don't, there's a lot of things I don't really care. It's not that I don't even like them, it's just, I just don't feel like investing in them, right? It's just, I just want to hold L1 stuff and, stuff that I don't really have to think about. So these are my big 3 tips on what I would do if you're just trying to figure out how to do your own research. Learn about expert judgment. It just comes with your gut feeling, and you'll figure it out over time. The second thing is know your bases. Research the project that you want to invest in. Figure out what's going on with it. Let yourself take some time when doing some research and, what are the tokenomics? What's the distribution? What part of the blockchain was given to the founders and what parts for the community? Stuff like that. What do you expect out of this project and what do they expect out of themselves? Why should you hold the token? And then the third thing is figure out what you don't like. It'll make your life a whole lot easier when you're trying to invest. If you don't like real estate and everyone says that they're getting rich on real estate, then you don't have to worry about investing in real estate if you know you don't like real estate, right? If you don't like crypto, just don't invest in crypto, even if it, everyone says it outpaces everything, right? Just go invest in stocks. It's okay. You'll still make money, right? So figure out what you don't like. Hopefully that's a good video and helps you do your own research and kind of gives you a good mental place to start if you're just trying to figure that out. And even if you've been doing it for a while, I always think it's good to kind of sit back, and I kind of do these things without thinking about them. I kind of do my own research without really thinking about the steps, but I think it's always good as investors who feel that we're not beginner anymore to kind of rethink about these ideas every now and then. All right. So I hope everyone had a great Mother's Day and has a great week coming up. Other than that, we'll see you in the next one.